Hi everyone, in this video I'm breaking down the biggest covered call ETFs for European dividend investors. If you're looking for yields higher than the typical 3 to 5% we see with traditional stocks, this is the video for you. I'll be giving you a full breakdown of each ETF prospectus, why I find them interesting, their recent performance, and a look at my personal holdings. We're going to cover a specific list today, mostly focused on JP Morgan and Global X funds, plus one from UBS that I will mention briefly. We will be diving into JEQP, JGPI, QYLE, JEIP, and XY7D. Stick with me for the next 10 minutes and you will know everything you need to know about these income powerhouses. Before we dive in, it's important to note that the European covered call landscape is currently dominated by two firms. First, JP Morgan, the largest bank in the world, and second, Global X, owned by Mira Asset Management, which has about $140 billion in assets under management as of December 2025. Global X has a massive lineup ranging from commodities like silver and copper and uranium, defense, and infrastructure. However, they are most famous for their dividend ETFs, specifically QYLD, which many of you know from US-based finance content. Today I'm going to show you the European equivalent of QYLD in the upcoming slides, so stick around until the end of the video. Let's start with JEPQ. This ETF invests in the Nasdaq 100 with a focus on dividend payers while using a covered call strategy to generate extra income. It carries a 0.35% expense ratio and uses physical replication. It is weighed towards tech giants like Nvidia, Apple, Alphabet, and Microsoft. Since its inception, it has returned about 11.6%. Despite the volatility from the 2025 tariff wars, it has recovered well, yielding an average of 9.63% in 2025, with a current yield sitting at 11.5%. Next is JGPI, which follows the MSCI World Index. Like JEPQ, it aims for income and growth, but with a global scope. It holds 233 companies, including Johnson & Johnson, Deutsche Telekom, and Microsoft. It has performed impressively, up over 20% since its inception in late 2023. The current yield is at 7.84%, and this used to be my largest holding, but I have diversified into individual covered call stock, and I currently am rebuilding my position, and I hold 7 shares as of March of 2026. Then we have QYLE, the European UCITS twin of the famous QYLD. It generates high income by selling covered calls on the Nasdaq 100. It pays out monthly, which is a huge draw for income investors. It has been a beast since 2022, thanks to its very diversified holding and nearing 40% price return, which is very impressive when you also compare it to its very high dividend yield. I currently own about 270 shares. It is a pure income play. I do not expect massive price growth, but the 10.62% dividend yield is hard to beat. Fourth is JEIP. Unlike the others, this focuses on broader US equities rather than just the Nasdaq. The struggle is that this one was hit hard by the 2025 tariff wars, particularly in the healthcare and industrials, where it has a pretty significant exposure. This explains the very low price performance of about 2.57%, though it maintains a very decent yield of 7.65% as of today. Finally, XY7D, which tracks the S&P 500. This has been an incredibly resilient ETF, returning over 23% since its inception in 2023. It offers a solid yield of 9.68%. I currently hold 724 shares valued at roughly $11,000. It is a great way to get S&P 500 exposure with a massive yield. So that's the lineup: JEPQ, JGPI, QYLE, JEIP, and XY7D. Each has its own strengths and weaknesses depending on your goals. I'm very curious, which one of these are you investing in? Let me know in the comments, drop a like if this was helpful, and if you want a deep dive into that UBS fund, just let me know.